slipped to the second spot in the last financial year. And China finds it very hard to accept this. So it's trying to come back on top by rejigging the numbers. Here's a report.
China is losing its grip on the Indian market. New Delhi has a new top trading partner now, the United States of America. Data from the last financial year is out. Bilateral trade between India and the US stood at close to $120 billion. What about China? It has slipped to the second spot. In 2020 to 21, the trade figure for China stood at around $115 billion. The numbers speak for themselves. India's bilateral trade with America is growing. India is cutting back its dependence on China. And Beijing doesn't like that one bit. It is challenging New Delhi's trade numbers. The Chinese Foreign Ministry came up with its own calculations. Beijing claims its trade volume with India stood at around 125 billion and not 115 billion. China has more complaints with India. Recently, Chinese tech companies like Xiaomi, Vivo and ZTE have faced scrutiny. They are being probed for financial misconduct in India. Beijing is miffed by the crackdown.
We firmly support Chinese companies to defend their legitimate rights and interests. The Indian side should act in accordance with the law and provide a fair, just and non-discriminatory business environment for Chinese enterprises to invest and operate in India.
China is known for strong statements and clever accounting, but it cannot contest the obvious trend. India is moving away from Chinese goods. This year, New Delhi secured 2 trade pacts with Australia and the UAE. More deals are in the pipeline. India has begun negotiations with the European Union, the United Kingdom and the Gulf Cooperation Council. With the United States, New Delhi is exploring other ways to expand trade. The focus is on improving market access and investments. The shift away from China has clear economic benefits for India. Going by one estimate, India can add $20 billion to its GDP by reducing its dependence on Chinese imports by half. How can New Delhi accomplish this? It can offer production-linked incentives to manufacturers who make in India. More opportunities can open up if India can integrate more into global supply chains. New Delhi is considering one such proposal, the America-led Indo-Pacific Economic Framework. Indian Prime Minister Narendra Modi had joined its launch in Tokyo last month. The Indo-Pacific region represents an opportunity for India. It accounts for more than 60% of the world's GDP and 50% of the global merchandise trade. If India can become a supplier to the Indo-Pacific, it can further shrink the market for Chinese goods, both at home and abroad.
Western sanctions, Russia's oil production has dropped by 1 million barrels per day. Meanwhile, prices have exploded. In order to limit price shocks, the U.S. is demanding that OPEC increase production volumes. Some member nations are in favor of raising production quotas, but this requires agreement with Russia. After the United States, Russia is the world's second largest oil producer, and through the OPEC Plus membership, Russia is bound to the decisions of the other OPEC countries. Currently, Russia has no interest in increasing production volumes and might not technically be in a position to do so anyway because of the barrage of Western sanctions. A decision is now on the table to exclude Russia from the cartel or not.
Andreas Goltau is director of the Willy Brandt School of Public Policy. Is Russia going to get kicked out of OPEC Plus?
Well, I guess that very much depends on the political signal that OPEC wants to send. I mean, there's a couple of countries that have spare capacity still, and that's precisely the ones that are pondering this idea of kicking Russia out. But But on the other hand, the question really is, how do you respond to demands from Washington, from Brussels, from the capitals in Europe? And what is the political signal that you want to send? Do you want to align with Russia, or do you actually want to say, look, we as a cartel, we take market management seriously? And that's precisely the question OPEC needs to answer today.
Is there enough spare capacity there to offset the drop in Russian production that we're already seeing?
Well, there is some spare capacity indeed. The Saudis have spare capacity, UAE have spare capacity. There is discussions going on with Venezuela, for the sake of the argument, on whether some of the sanctions that are still in place could be lifted, possibly increasing supply from that country going forward. So there is spare capacity in the market, but maybe one thing that's important to bear in mind is we're talking about 2.4 million barrels of oil a day that Russia sends to Europe every day, and replacing that might be difficult.
Okay, but you say the capacity is there. Is the will there? Because so many of these Middle Eastern nations have very close ties to Russia and rely on Russian wealth.
Well, they to some extent can hide behind the Russian actions in Ukraine and that aggressive war, simply because they can blame Russia for higher oil prices and pocket the windfall, and that's precisely what has been happening. But there's another element which is important, and we have seen this in the past already, in the 1970s, for instance, when prices were skyrocketing. At some point, the demand side will respond to the prices and consumption will go down, and that's precisely not what Saudi Arabia wants and other countries that want to stay in the game for some time to come.
To see demand fall, I mean, surely we would have to see some sort of shift to, and a huge shift to renewables, which is already underway, but probably won't come quick enough for the Ukrainians.
Certainly not, and I think it's also important to bear in mind there's some things you can do with renewables when it comes to replacing oil, but there's a lot of things you cannot. Think about the petrochemical industry. You cannot run them on electrons, and that's precisely where the West needs to probably look at demand-side responses. By the way, this is happening already. The global economy is in great shape. We will see probably a recession in the Eurozone going forward. The West is not growing as expected, nor is China. So we are seeing some demand-side responses already in the shape of economic contraction, and that will temper demand.